Welcome back to the channel. Today we are conducting an extensive deep dive into Oracle Corporation's latest earnings results and future market trajectory. As a titan in cloud infrastructure and enterprise software, Oracle's performance is a major indicator of the health of the technology sector. With the stock navigating key levels and analysts providing fresh multi-year forecasts, there is much for ORCL investors to understand. Before we break down these critical financial tables and charts, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the Oracle report. We begin with Oracle's current market standing on the Nasdaq. As of the latest reporting, ORCL is trading at $159.16, with a modest intraday decline of 2.3%. The chart highlights the significant journey this stock has taken, with a 52-week range spanning from a low of $118 all the way up to a high of $345. This extreme range reflects the volatile sentiment surrounding the tech sector and the shifting expectations for Oracle's cloud scaling. With a trading volume of over 37 million shares, the stock is clearly a focal point for institutional investors. This market snapshot provides the essential context as we transition from price action into the fundamental earnings data. Understanding where the stock sits relative to its yearly highs and lows is vital as we evaluate whether Oracle can find a floor at these levels or if the current downward trend is a temporary pause. Turning to the earnings per share chart, we see a company that has maintained an impressive streak of consistent performance. The dark blue bars represent estimated EPS, while the light blue bars show actual reported figures. For every single quarter in 2025, Oracle has delivered a definitive beat over analyst expectations. This trend of outperformance is a powerful signal of operational efficiency and the successful scaling of its cloud services. In the fourth quarter of 2025, the reported EPS came in at $1.2 against an estimate of 1.9, marking one of its strongest beats of the year. Looking ahead into 2026 and early 2027, analyst estimates point to a continued growth trajectory, with quarterly projections climbing toward the 1.5 mark per share. The visual consistency of these 2025 beats and the rising future estimates provides a robust fundamental foundation for the company's long-term growth narrative and builds significant investor confidence. The quarterly earnings surprise table quantifies the magnitude of this recent outperformance. For the most recent quarter ending February 2026, Oracle reported an EPS of 1.3 against a consensus forecast of 1.4, resulting in a 6.2% positive surprise. While impressive, the prior quarter ending November 2025 was even more explosive, delivering a massive 51% surprise. The August and May 2025 quarters also saw solid beats of 4% and 3% respectively. This consistent ability to outperform analyst models quarter after quarter is a primary driver of the stock's valuation support. It forces analysts to continuously reevaluate their models and often leads to the beat and raise cycle that investors look for. Seeing how Oracle maintains this winning streak into the remainder of the 2026 fiscal year will be a critical signal for the stock's continued momentum and its ability to weather broader market shifts. Looking ahead to the remainder of 2026 and early 2027, the quarterly earnings forecast table outlines the specific targets analysts have established. For the quarter ending May 2026, the consensus EPS forecast stands at 1.2, based on 10 analyst estimates. The range for this period is narrow, with a high estimate of 1.3 and a low of 1.5, reflecting a tight conviction around the company's near-term earnings power. As we move through the year, the consensus fluctuates slightly, with 1.8 projected for August and 1.5 for November, before climbing to 1.2 in February 2027 and reaching 1.3 by May 2027. Notably, the revision data shows stable sentiment, with 0 revisions in the last 4 weeks across most periods. The high number of estimates for each period ensures that these consensus figures are a well-vetted representation of professional market expectations for Oracle's near-term performance. The long-term yearly earnings outlook provides a broader perspective on the company's scaling story. For the fiscal year ending May 2026, 15 analysts have converged on a consensus EPS of $6. Looking further out, the growth is projected to continue its upward march, 6-point SAN for 2027 and reaching 8.02 by 2028. This represents a steady growth in annual earnings per share over the next 3 fiscal years. Within this outlook, we see 2 upward revisions for the 2026 period in the last month, signaling that conviction is building among key analysts. The high-end estimate for 2028 of over $9 per share underscores the significant upside potential if Oracle successfully capitalizes on its cloud infrastructure and AI partnerships. This yearly data is vital for long-term investors as it highlights Wall Street's expectation for Oracle to consistently compound its earnings as enterprise cloud adoption becomes an increasingly central part of global IT infrastructure spend. The change in consensus chart visually tracks the stability of analyst expectations over the past month. For both the full fiscal year end May 2026 and the upcoming May quarter, the bars remain remarkably flat when comparing current estimates to those from 1 month and 1 week ago. This visual consistency confirms that recent market developments and the latest earnings data have been fully integrated into analyst models without triggering any major shifts in the consensus targets. While there isn't a dramatic surge in positive momentum driving the bars higher at this moment, the absence of any negative momentum pulling them down is equally important. This stability indicates a period of established equilibrium where the market is currently satisfied with Oracle's projected trajectory. For investors, this plateau in the consensus suggests that the current stock price is reflecting a well-vetted and stable earnings outlook, providing a solid floor for the company's market valuation as it prepares for its next growth phase. The estimate momentum summary provides the final layer of detail behind these shifts. For the fiscal quarter ending May 2026, the consensus EPS forecast has remained unchanged at 1.woo over both the past week and the past month, with none of the analysts raising or lowering their targets. However, for the full fiscal year ending May 2026, there has been a very slight downward adjustment, with the consensus forecast moving from 6.02 to 5.00. The summary notes that while 2 analysts raised their forecasts, 1 lowered it during the period. While this fractional change is minor, estimate momentum is often considered a leading indicator for stock performance. This current stable to slightly negative momentum state suggests a more cautious approach from the professional community as they balance the massive November beat against broader enterprise spending concerns. These minor adjustments reflect the evolving professional opinion as analysts refine their long-term models following the recent quarter's results. Finally, we look at the raw tally of the number of estimates changed to confirm the breadth of this recent sentiment. The table shows a very focused and narrow shift in analyst activity. For the May 2026 quarter, we see 0 upward and 0 downward revisions, reinforcing the near-term stability we've discussed. For the full 2026 fiscal year, we see 2 upward revisions and 1 downward revision. While the number of analysts moving their targets is small, the net direction is slightly to the upside. This indicates that the few analysts who have updated their models recently see slightly more potential for growth. The lack of any massive revision wave across most categories indicates a firm, if slightly cautious, consensus in the financial community. For investors, this tally serves as a final confirmation that the market is in a wait-and-see mode, holding its breath for the next major catalyst to provide the clarity needed to push these targets higher or lower. In conclusion, Oracle Corporation continues to demonstrate strong fundamental execution, highlighted by its perfect streak of earnings beats in 2025. While analyst sentiment has temporarily plateaued with minor revisions, the long-term forecast remains highly bullish with significant growth projected through 2028. The stock is currently navigating a wide yearly range, making this a critical junction for investors seeking to capture the cloud infrastructure upcycle. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on ORCL and the broader tech markets. We'll see you in the next analysis.